Got it. I want to turn to what I think is an extremely important financial story. It is very wonky, as you might say. I'm kind of preemptively telling you this to avoid the buzzer that's propped there. Thank you very much indeed. All right. Look, listen to this. A record $5.5 trillion worth of government bonds worldwide now have a negative yield. Please don't buzz me on this. This is very important. That means there's $5.5 trillion worth of money in bonds which pay you no interest whatsoever, and in which you actually give money to the bond issuer, governments usually. What's with that? Steve Forbes is here. I mean, you know, there's a great reluctance on our part to cover this story because it is very, very wonky. Negative interest rates. Now, there's a turn-off. But it is vitally important to what's going on in the world, isn't it?
What's happening is the equivalent of rent control, suppressing the price of borrowing and lending money. And when you do that, you deform the credit markets, which hurts small and new businesses. You see it in this country. You see it in Europe. You're going to see it again in Japan. Negative interest rates are even worse. That's a tax on financial services, and that's going to drive the economy down.
Happening? But why is it happening?
Because central bankers now meet the definition of insanity. They've been trying this for year after year after year, suppressing interest rates, by gobbling up government bonds, allocating credit to the government, thinking that stimulates the economy. Manifestly, it has not. So what do? They double down and do it more. It's bizarre. When people write the history of this era, they're going to say, what was the matter with these people? Didn't they learn? And it also is an indictment of the political class in this country and in Europe and Japan, that when you have this manifest failure, they don't call them to account.
Stuart, there's other news, too. The Federal Reserve, U.S. Central Bank, is saying to U.S. banks, get ready, negative 3-month yields, 3-month bill yields. So they're going to test the banks in coming months to get ready for U.S. savers, pay to save. You're going to have to pay the U.S. government to save on the 3-month T-bill. Negative yields on that.
So it failed in Europe, failed in Japan, so we're going to have failure here. Really bright stuff.
You think that's if it happens? If I lend money to the government for 3 months and I don't get any interest, in fact, they keep a little of my money, that's a disaster, you think?
Oh, of course it's a disaster. It means you don't have working credit markets. If you don't know the price of lending, especially short-term lending, if you're a private lender, guess what? Loans stay flat or go down, which is what's been happening.
That's fascinating.
It's disastrous.
Look, thank you very much for approaching a very difficult story, but a very important story.
It's absolutely important, and because it's difficult is why these people get away with their failures.
All right. Thank you very much indeed, Steve.